It's time for the Big Three. I'm Nicole Petalides. 3 stocks, 3 charts, 3 earnings previews for you. Rick Ducat will take us through the charts. Jenny Horne will preview some of the earnings reports. So these are big names, and it's great to see you both. Jenny, we're looking at Delta Airlines. This name reports on Friday morning, has been a winner, 1 year up 47.5%. What do you think people are watching for when it comes to the earnings?
I think we're hoping, frankly, for a lot of this momentum to continue, Nicole. I mean, I think in maybe underreported point of strength we've seen post-election has been these airline stocks. I mean, United just closed out its best year on record, so that's been amazing. Delta was not far behind as far as the second best of 2024 in the airline space. So a relatively high bar. We are expecting earnings to improve almost 36% annually on revenue. That's also expected to modestly rise about 2.5% again on a year-over-year basis. But there are still some pressures that are facing the overall airline space. I mean, concerns like fuel price volatility as well as inflationary pressures and these limited aircraft now deliveries. So I do think that the Boeing situation remains somewhat in flux, although right now it does seem like the impact of the holiday season is expected to be a pretty sizable benefit, as well as I was reading some of the analysts' commentary that said they were very focused on this lawsuit against CrowdStrike. Of course, we did get an update in October that Delta has sued CrowdStrike in Georgia state courts over the outage in July that brought down their systems and forced the cancellation of roughly 7,000 flights. So on the guidance front, they do expect capacity growth of 3 to 4% year over year, revenue growth of mid-single digits, and non-fuel unit cost growth of low single digits, again on a year-over-year basis. And I think that given all of the trends we've heard already out of the holiday season, it seems pretty favorable. But again, as we know, it's all about expectations, and if they're able to beat them, they did actually miss on top and bottom line estimates last quarter. So I know we've seen travel demand surge. We saw record numbers over Thanksgiving as well as Christmas, but this stock has been on a pretty decent run, so they have to deliver now, of course.
Yeah, and Bank of America noting that Delta was one of the few airlines that did not update guidance in December, but feels that they expect Delta to maintain the 10% earnings growth and sees a strong fourth quarter result. Let's take a look at the chart here, Rick. Some of your thoughts on the chart.
It's been a pretty nice year for airlines in general. Here you can see that we had kind of a nice rally earlier during this chart here. We gave back a lot of the gains, but then a big push to the upside once more to take us into the highs of 67.50. However, you know, when you look at these charts a little bit closer, you see that one of the actual important areas that really stands out more is 64.85. That's our best close that we had. So notice that even though we had a lot of movement above that level on an intraday basis, that was our best close. That was really the mark to beat, and this one has really struggled to make its way above that level. So backed off a bit from those highs. Now we recovered above our orange 63-day EMA after a bit of a downside test there that took us all the way back to these lows near 56.81 before we had our gap up. Now we have recovered above our yellow 21-day EMA here, our exponential moving average. We can see that RSI, our measure of momentum, is starting to improve a little bit as well after mostly kind of following along the price action here. We're above the 50 midline as well here, so perhaps a more bearish or bullish picture as we head into this earnings event tomorrow here. But you can see RSI was interesting because we had a bit of a breakdown here. That's when the RSI momentum trend seemed to be broken, transitioning into a period of slowing momentum. So even though we had bearish divergence, we still had prices climbing. It's just the pace of the gains were slowing down. This isn't something where you see this and you're like, oh man, we're must be due for a pullback here. It's not really how it works. It's just like, hey, you know, we're starting to lose a little bit of steam here, perhaps be on the lookout for some consolidation, which is kind of more what happened here. Now, when we overlay our volume profile study, we can see that there's some key levels here, some volume nodes around 64, 61, and around 55 or so. So those are standout price levels. Standard deviation channels also reveals that our yearly linear regression line, our line of best fit, is right near our orange 63-day EMA, as well as one of these low points. So around 59 to the downside is key, as well as 57 below that. To the upside, 63 represents these old highs, and then our best closing area near that 65 strike level that we had mentioned, Jenny.
All right, that's very interesting, and thank you for those great charts, Rick Ducat. Jenny, you want to add on some final thoughts about Delta?
So I really think when it comes to Delta, there is still also going to be, a sizable impact from the election. I know that it still remains unknown, but I do think clarity on that is something we probably won't get tomorrow. But these names have traded, pretty heavily correlated with right now the expected new administration. What that looks like for airlines, I think still remains a question mark. So that is something we get, of course, in the coming months. So more of a long-term story, I think, to watch here.
And look, the resiliency of the U.S. consumer. We know the TSA security numbers for travelers and the number of checks have, in fact, been even higher figures for 2024 than what was anticipated. So that was some good news also for these travel names. Let's take a look at Constellation Brands, which hit 52-week lows earlier this week. It's been riding on Friday's earnings report. Tell us a little bit about this name.
I know, and this is another one that falls into the consumer space, but gosh, it has not looked that way because this name has been, like you said, at 52-week lows, underperforming the overall market. And a lot of these beer and alcohol-focused, wine-focused stocks have underperformed. So at least it's more of an industry trend right now. We did see revenue start to uptick last quarter as far as some acceleration. It rose 2.5% year over year, which improved from the 1.4% growth rate they recorded the same quarter last year. Earnings expected to come in around $3.31 a share. I did think it's interesting if you look at the trends of within their revenue over the last, now 4 or 5 years. Historically, we have seen the first quarter as their weakest as far as like the annual earnings are concerned. Third quarter, which we did just get previously, that's actually the highest. Well, fourth quarter has historically been sizably a bit of a pullback from the results we see in third quarter. So we're not expecting a ton of growth. Right now, if you look at the staples space, though, it's underperformed the overall market, even the broader sector, with shares actually down overall in the staples space by about 7.3%. Really since, the start of since the election, and actually Constellation has underperformed even its own sector. So this one with a very low bar into earnings, which then always does provide hopefully some upside, as these are typically seen as good catalysts if you have the right financial footing, of course.
Right, understood. All right, so we're waiting to see more about this name, which has been a laggard. The chart's going to be a different story, right? We saw one that was a winner and this one that has been trending lower. For example, 6 months down 13%. Rick, take a look at the technicals for us, please.
Yes, and like many things, it kind of depends on your perspective here. So starting with our 1-year chart on Constellation Brands, for sure, you're absolutely right. A chart in decline, kind of languishing here. Things looked a little bit better before, kind of a more sideways picture. But when we started to fall below this area here on our chart, kind of this area of heavy trading volume between about 240 to 250, that's when things started to collapse a bit. Our point of control was around 247. You can see that now that is a point that lines up pretty nicely with our +1 standard deviation channel. So that could be an upside area to keep an eye on here if we do recover. And now we are finding ourselves between our -2 and -1 standard deviation channels. Below our linear regression line, our line of best fit, we're below all our moving averages. They're trending downward here. RSI, maybe perhaps a bit of a bright point here. We did not make a lower low, and we have rebounded out of the oversold area, but the prevailing trend is still to the downside here. You can see this longer-term pink trend line going across those highs. RSI is still quite low. Even though we're not oversold, we are just kind of a couple points above that area. So still a precarious situation to be sure. But I think that a long-term chart in this case is really interesting here. This is 10 years on a weekly basis here. And look, when we have our study of volume profile, once again, this long-term study shows us that the point of control, the area of heaviest volume, is near 216. So pretty close to where we are now, as well as a significant bottom area near 209. You can see that price repeatedly bottomed out near there before rallying. So this could be another key area to watch. Maybe it's not as bad when you look at the longer term view here.
All right. And, as I think about this name, I did see how RBC was talking about this name and talking about some of the tailwinds, which included distribution, demographics. Those were some good things for the company, but facing some headwinds, which could be the uncertainty of the new administration and tariffs and immigration and how that may factor in. Final thoughts, Jenny, on this name?
I totally agreed. I meant to actually mention, we've seen aluminum costs also remain fairly in flux, and that's been one that has weighed on not just these beverage producers, but are like alcohol producers, but all the beverage names. Monster, Celsius, all these names pulled back pretty substantially towards the end of last year. So now it will be interesting. We're still in an inflationary environment. I know we talk about inflation easing, but costs do still remain elevated at the grocery store and for these various companies that are producing these goods. And so I do think, while we're seeing an improvement in inflation, we are still in an inflationary environment, which has been a huge reason for some of the underperformance.
Yeah, and we know that Walgreens moved the earnings date from January 9th today. That was the previously scheduled date for Walgreens, obviously in honor of President Carter and obviously the late President Carter and his funeral and such. So they've moved the numbers, but we're going to be watching closely this report on Walgreens. So the shares are down more than 60% over the last year. What stands out to you, Jenny?
I do think that this is maybe the most interesting to me of the three, because Walgreens, frankly, has the most to prove. They were one of the worst performers in the S&P 500 last year, and I don't necessarily think that any of the guide we've heard from the company has really rewritten this narrative. So hopefully they can do that, of course, tomorrow morning. But right now, the overall street does still rate this name on average at a hold. They are expecting, and they took the average price target, about an advance of 8% from where we closed yesterday. But right now, there's a very cautious feeling on this name. They're expected to report about $37.3 billion in sales, which would be actually up from last year, on now a net loss per share of 2 cents versus 8 cents per share a year ago. Adjusted earnings are expected to, though, be positive at 38 cents a share. That would be nearly half from what they reported again last year. And they've seen a difficult environment. They did note that they're still in this very challenging retail environment. They lowered their prices in an attempt to win back some of their consumers and saw their lowest levels in decades in the second half of the year. Right now, standing at around $9 still. So it's frankly shocking when you look at the price of Walgreens and where we've fallen. And they did announce plans to close roughly 1,200 locations in the U.S. over the next 3 years as they focus on stabilizing that retail pharmacy business. I think that this name, as well as CVS, are just still reeling from a different type of pharmacy environment post-pandemic. But that narrative is no longer enough. And I think that's why we've seen this name get so punished, because a lot of these names that were the pandemic darlings have at least attempted to recover, rewrite a narrative. Walgreens has been a bit late to that. So at least being more efficient with their costs. But gosh, I don't know if the story has necessarily improved for any of these retail pharmacy companies.
Right, understood. Rick, some of your thoughts here.
A very difficult chart. We're down, 42%, 43% from our 52-week highs. But once again, like on our last chart here, volume profile shows us significant information here. The point of control, the area of heaviest trading, basically right where we are now. It's at about 940 or so. By far, this is the most trading volume and activity here as we are at these depressed levels here. Some people would say that this is a sign that perhaps a significant bottom is in. That also kind of can go the other way. Are you trying to catch the proverbial falling knife with a play on a name like this that seems to be in pretty serious trouble here? Nevertheless, not really a clear trend one way or the other at this point. Moving averages are 21 and 63-day clustered together right on top of each other, not really showing any clear trend direction here. RSI, not really all that much help either. We can see kind of this triangular shape suggesting an environment of shrinking volatility here, which is not uncommon as we head into earnings. Maybe this could be a situation where we see some fireworks. But once again, as we digest the recent information, I think it's important to look at this longer term chart here. 10 years, 97 was the high. Now we're down near $8 or so, $9. But once again, the heaviest volume by far is near these depressed levels here. Another serious volume node up here near about 21, this sideways phase. Then an eventual high right here near 27. Those could be some notable areas to watch if we do start to get a rally in a beaten up name like this.
Right, understood. And, as I think about these names and earnings season and a new year, I mean, each one will be so important. A final thought here, Jenny, for tomorrow even.
I agree. And I think that especially because it feels like we have been relatively light as far as catalysts in this market that will cling on to some of these results. And I will also say any guidance from Walgreens on their potential acquisition. There was rumors floated about a month ago that they could be looking for a potential sale. So I'm not sure they'll comment on that, but that's definitely made this more compelling because it just would be an interesting dynamic to imagine ownership of Walgreens obviously changing hands. Still fairly speculative, but that does remain a big question mark here, Nicole.
Yeah, and look, we already have a week that we are to the downside. We have one more trading day and some jobs numbers too. But for this week, we're down just under 0.5% on the S&P 500. So we'll see what tomorrow brings. And that's obviously Wednesday was sort of mixed. So we'll have a lot more to discuss going forward. Thank you both, Jenny Horne, Rick Ducat. Great to see you. Thank you for the big three. Today, we looked at Delta, Constellation Brands, and Walgreens. Thank you.